In this video, I'm going to present you the findings of an experiment I did with the UT-bot alerts trading strategy I recently found on YouTube. I tested this strategy on cryptocurrency to see if it also works when using crypto. And the results I got might surprise you, so keep watching till the end. So the video I found is from the channel Trades by Mo, and he tested his TradingView strategy for a month. I will leave a link in the description so that you can watch this video and the results too. Let's go over the strategies, indicators and rules first, and then I will show you the test results I got on my setup. The strategy uses the following indicators from TradingView. The UT-bot alerts indicator. There are two TradingView indicators as far as I can tell, and they both work exactly the same. The key value here is set to 2 and the ATR is set to 1. The Linear Regression Candles indicator is also used and has the following settings. Signal smoothing should be set to 7 and the Linear Regression Candles length should be set to 11. Now the original trading strategy also uses the Sessions on Chart indicator and advises to only trade during the New York session. This strategy is also designed for the 5-minute Nasdaq chart, which is heavily influenced by the New York markets. And it's advised to only use the first 3 trading signals and then stop trading for the day. Now the trading rules of the video are simple. Again, only take the trades during the New York session and wait for the UT-bot alert signal to flash. Also ensure that the candle color matches the signal. So for a sell signal the candle must be red and the price must close below the linear regression line. And for a buy signal the candle must be green and should be closed above the signal line. Then you can enter the trade at the close of the signal candle. And you should place your stop loss above the recent swing high for a sell and below the recent swing low for a buy. You should exit the trade when the price closes back above the linear regression line for a sell or below the line for a buy, and only exit at the close of a candle. Now for my test I recreated the TradingView indicators in my Python TA module so that I could do a fully automated backtest on the strategy too for the crypto market. And you can download this module from the GitHub site or install with pip. The link of the module will be in the description. Now I also had to make some adjustments to the strategy's rules because crypto is a 24/7 market and only trading New York sessions would be limiting the strategy too much. And this also goes to say for the first 3 signals of the day. In crypto trading there's no day or night, so here we are going to trade all day long. The second thing of course is that the suggested settings are for the Nasdaq trading, and it could well be that for crypto these settings are too tight or too loose. Nevertheless, let's assume that these settings are going to be good for crypto too for this test. And you can also of course tweak and adjust these settings later if you like the trading idea and want to develop this further. So having said all this, let's do some backtests to see if I got the same results or similar results as the ones that are presented in the video. In the meantime, I want to thank you for viewing this video, and if you like what I do, then please click like, subscribe and click the bell icon to get notified on my future videos. All the files that I create, the strategy code, notebooks, backtest outputs and other informational blog posts on what I do are available on my Patreon site. This way you can check out my work and replicate what I do, just to be fully transparent here. If you want to enjoy discounts or other benefits on many trading related services that I personally use, like Bybit, TradingView, Linode and many others, then you can use the affiliate links that I have in the description below. Again, many thanks for your support, and now let's get back to the results I got from my backtests. I tested this strategy out on 50 cryptocurrency pairs over a longer period of time than in the original video to get a good grasp of the strategy's potential. It's a fully automated backtest where the trading strategy is turned into code so that I can do a complete and unbiased test on this algorithm. The actual code has been split over 2 files so that I could do a test with spot trading, but also one that can be used for futures trading. And the latter is of course used to also do short trades. And this matches also the original video's trading strategy the best. Let's start with the futures trading version first to see how well it ends up. Now I do not want to put too much emphasis on the end balance between these 2 tests, but more on the performance indicators of the strategy. I have a whole bunch of performance indicators that can be analyzed, and let's only discuss the most noticeable ones in this video. You can download the full report from my Patreon site if you want to. The original strategy had a 66% win rate, a 123% profit, and a best trade with a 10.59 risk-reward ratio. But the futures trading version on my crypto trading setup could not manage these same results. Only on the daily time frame it could manage to get a profit, with a mere 36% win rate, a maximum drawdown of 42%, and a profit factor of only 1.1. And right from the start of the backtests, these losing trades caused a negative trading balance. In the end it managed to have a positive end balance too, but I'm not sure about this if I would start this trading strategy today. It's also interesting to see that the amount of short and long trades is 50% each. And another thing that I always find interesting here is to see where a strategy loses its money and if there is something that can be done about it to improve its performance. For example here, the exit signals between the longs and shorts are quite similar. It is not that long trades suffer a lot more from hitting stop losses than short trades. In this case it's marginally, and overall these numbers are pretty similar. But overall, if you compare the gains and losses that are caused by long trades or short trades, then we see that short trades tend to cause a negative profit in this chart. So it is clear that by entering a short trade, we have a higher chance to end up with a losing trade than with a long trade. In this chart you can also tell that the end result is not comparable with the best performing trading algorithms I have in the strategy league. And in the end this futures trading version ends up pretty far behind in the overall list of strategies that I tested so far. What about the spot trading results? Again, we can see that only on the daily time frame we have the best result. The other time frames ended up in a negative end balance. The performance indicators of spot trading are also not really comparable with the presented results of the original video. However, in that video the strategy was only tested for a month, which I considered way too short. Doing a similar test over multiple years might lead to a whole different end result. But again, my test also does not use all the trading strategy rules too, so it's comparing apples with pears in this case. In my test, the most remarkable chart in this test are the drawdown chart in relation to the equity curve. Using only spot trading here seems to favor this strategy, because up until the end of the last bull market, the strategy did manage to hold up pretty well. Only after the last bull market stop, the drawdown gets very high. You can also see this in the performance decay chart, where the rolling sharp ratio falls off a cliff. And this is valuable information that help you to improve the strategy settings. Maybe another indicator that detects the bull and bear markets might improve the overall performance significantly here. And it also seems that the stop loss settings in this case was the culprit of most losses of funds. So in this case, for example, widening a stop loss or using another indicator for the stop loss setting might be able to improve the strategy's performance. And if it weren't for this large drawdown, it might be even that it could up ending higher in the total strategy league here. However, if I consider all the performance indicators, in the end its score is way too low and it still doesn't even manage to end up in the upper half of the total list of tested strategies. So, what is my conclusion about the proposed strategy in the video? Well, from my experience I can only say that the results that were shown in the original video looked promising, but presenting only a month's worth of backtesting is too short in my opinion, because the end result also depends on the month you are testing. I could also show you some better results if I only took the most bullish months in the last bull cycle, but that would add a huge amount of bias and that's not the purpose of backtesting. Backtests should protect you from all the biases you might have so that you can make an honest and objective opinion about the probabilities of having a winning trading strategy for the future. Of course, you are always allowed to comment on my conclusions and results as well, because I realized that I did not do a 100% comparable test of this original video's idea. I did trade 24/7 instead of the New York time only, and I did not use the Nasdaq, nor did I stop trading after 3 trades each day. And it might as well be that other people achieved great results using that strategy. But that was not the intention of this video anyway. I wanted to try it out if it was also fit for purpose on the crypto markets. And you should always do your own research first and extensively test the strategy before using it in real trading. This was my take on the presented strategy of this video. And it is most likely that I will continue to do more of these tests to find out if these will be usable in crypto trading too. And if you like what I do in these videos, then smash the like button. Maybe you can also point me out to other videos that I can try to find out if they are fit for purpose for crypto trading as well. Thanks for watching and I'll see you in the next video. Goodbye!